right, good evening, ladies and gentlemen. It is another episode of the Corporate Life Show with McAden. I am Adeniyi Macarthy. Tonight is another episode on the Corporate Life Show with McAden, where we're discussing a fantastic topic: understanding insurance for business and for personal growth. So tonight is going to be an exception. Last week, I told us that we're going to be sharing insight on how you can actually tap into the power of what? Power of the knowledge of insurance. I know some of us, yes, some of us, we've been waiting, and I want to use this moment to quickly apologize for some minutes of delay. It was due to technical challenges that we were facing here, and it's all sorted out. Guess what? Tonight, I have a special guest in the house, and they will be discussing, they will be sharing insight with us on the show, letting us know how important it is for everyone to what? To have an insurance policy in place to take care of some issues and some stressful experiences in life. And with me today is Mr. Seun Oluboba in the house with us on the Corporate Life Show. Please let's welcome him into the studio. Thank you very much. Thank you very much, Mr. Seun. Please do join us in the studio now. Thank you.
Good evening, everybody. It's great to be on the show tonight.
All right, Mr. Seun, welcome to the show. Can you hear me, please? Can you hear me? Let me be sure
I can
you hear me.
I can hear you very well, loud and clear.
All right, thank you very much. So, how do you feel about joining us on the Corporate Live Show tonight? Yeah, in the studio with us.
It feels great to be here, and I'm glad that I have an opportunity to enlighten people on the knowledge of insurance and how it can impact their personal life and their career, and hopefully we will deepen the penetration of insurance in Nigeria. So it feels great to be here.
All right, thank you very much for being here tonight. Remember, guests, audience out there, remember to like the Corporate Life Show with McAden. Our handles on our social media spaces remains the same: Corporate Life Show with McAden. Corporate Life Show with McAden. Corporate Life Show with McAden. Follow us on our Facebook page, Instagram, TikTok, on LinkedIn, on YouTube. Follow us on all those platforms so that you can get more interesting content, especially interviews that we've had in the past. And there's a secret. There's something, a big announcement coming up later on the show. And as we continue with this conversation tonight, it promises to be great. So stay tuned and remember to invite a friend while we continue the conversation. All right, so Mr. Seun, you said already you are ready for us. You are excited to be on the show, and I want you to feel relaxed, interact with the audience as they come in with their questions. For those that will be throwing questions at us, and for those who will not be sending in their questions, I have questions for us to actually address the need of the people out there, so that we can enjoy the conversation. So let's start by a proper introduction. Why is it that you fit the profile of the person to educate us on the show tonight? Why is it you? Why do you think you have what it takes to tell us and educate us on insurance issues or matters tonight?
Okay. I've been in the insurance industry for the past 11 years, educating people, correcting the wrong notion about insurance, and meeting people's claim when the time for claim happens. Insurance is promise. We promise to do something when you have a loss. We promise to take care of your loss and take care of your claim when the loss eventually happens. And I've been able to do that for the past 11 years, meeting people's claim, educating them, making them to buy insurance, and then more so over the years, apart from the experience, personal development in the insurance industry, educating myself and getting chartered as an associate of the Chartered Insurance Institute. It's a whole lot of process, studying for over 2 years, some even more than that. But um, based on experience and qualification, I know it's a topic I can handle.
All right, thank you very much. Thank you. It's an exciting one for us to know. We are we're sure having a 10 years of experience apart from academic knowledge gives you the quality uh that quality we're looking for in someone that we want to educate every other person on the show. And that is what we do at the Corporate Life Show with McAden. Every Friday evening, we come in here on on your screen to what discuss matters, issues that may be affecting you as a professional in any aspect of life. And we make sure that our guests on the show are people who are worthy of being here. Knowledge is power. But when you share the knowledge, you share the light. And that is what we're doing here tonight. We are sharing knowledge and we are sharing the light. And that is why we will want to go into the conversation proper tonight uh, by asking our first question for tonight's show. And we always like to start conversation from the angle of definition. We always like to start our conversation from the angle of definition. And tonight, Mr. Sheo, you'll be helping us uh, with proper understanding, get insight on insurance. So, what is question one? What is insurance, and why do businesses and individuals need to be on an insurance plan?
Okay, basically, insurance is a risk transfer mechanism. People say take calculated risk and do this. So when you are taking a risk or you are going into a future that you might likely suffer a loss, you
Mhm.
don't want to bear the loss alone. You want to transfer that loss, and then also um, it also involve what is it called? Is it's also involve asset protection. And how do this come to play? It's about putting risk together. You know, you have a risk, you might likely suffer a loss, and then you want to transfer that risk to an insurer so that when you have a loss, that insurer can help you come back to where you were before you suffer that loss. That's what the insurance is all about. And then the real mechanism behind it is that several people who has that same risk pool their risk together, and then all of them contribute a token to have a cover. And when a loss occur from the pool of funds, everybody who suffer a loss will be reimbursed, reinstated back to where they were before that loss occur. Basically, that's how insurance works. It's basically risk transfer, pulling risk together so that when loss occur, you can actually be restored back to where you were before that loss occur. And nobody planned for loss, but it happens. Life is risk on itself, so that's why many people do insurance. And if you have a plan for the future, you have assets, you have businesses that you know that things might happen to in the future, then you have your best way of avoiding those future losses or unplanned losses is to have insurance. Basically, what you are doing when you are going into insurance is that you are transferring that insurance to the insurance company by paying a little premium to have a cover. So most times when a loss occur, you are paid a claim that is higher than what you actually pay as premium. So that's why every business is an individual that knows that life is risk. My assets can be damaged, or I have liabilities that I'm carrying. Most especially business owners. One major insurance that business owner does is liabilities, employers liability, and so many other liabilities that employers has. You transfer those liabilities by paying a little premium to cover those liabilities, legal liabilities, product liabilities, and so many others. So insurance basically is that you realize early, because insurance is what you can buy. when you actually need it. You have to buy it before you need it. So you anticipate risk, you assess it, and then you know what cover you actually need, and then you transfer it. So that aspect of transferring that risk is what we call insurance. Are you there with me?
Yes, I'm here. I'm just trying to along the line follow through the conversation and also check on some technical issues that we're facing right here. But then we'll continue with the conversation and then manage through all the issues we have here for tonight. But then it will be resolved in time before the end of the conversation. So thank you very much. I could get the fact that insurance is about taking care of the future risk before its occurrence. And you also mentioned that since the future is not certain, even though we have a plan towards getting the best out of the future, so we insure against the unexpected for a better future. Thank you very much, Mr. Oluboba, for being here on the show with us tonight, and we'll continue with the conversation. Of course, we want to continue with the conversation tonight, and we'll be moving on to the next question because of our time. The next question is what what is the most common misconception? What are the most common misconception uh, you want to correct on the show about insurance policies and insurance company?
Okay. In one of your publicity write-up prior to
Yeah.
this program this night, you alluded to the fact that most people think insurance company are thieves. That's one of the major misconceptions why many people don't do insurance. We are not thieves. Basically, insurance is a contract. It's a contract between the insurance company and the insured, which is the insuring public. That I know I might likely have a loss in the future. I have this car. This car is so beautiful. I love this car. And if my car has accident, I might likely have to pay from my pocket to repair it. So I want to come into contract with you to protect that asset, or I might likely have a liability as an employer of labor, or I'm planning for the future of my children, and life might happen, and probably that person won't be in the picture again. So I want that future of that my children to be assured. So I'm coming into contract with you to protect my children in case if I'm no longer in the picture. So it's a contract. You have identified a risk, and then you are coming into contract with me to transfer that risk to me. So there are terms and conditions in the contract. And by the time you fulfill your own end of that contract and the insurance company fulfill their end of the contract, you see that insurance is a beautiful thing. I've had to settle claim for a client who died. I paid the family over 18 million naira as claim. And the family were very grateful. At the time of claim, we were not saying, sorry, we can't pay because it was a contract. The client was paying a premium, and when she was no more, we settled the family over 18 million naira as benefit. So it's not a scam. What most people do is that they don't fulfill their own end of the bargain of the contract. They don't fulfill their own terms of the contract. And if peradventure they now have eventuality or a loss, they expect the insurance company to pay them claim. But sorry, you didn't fulfill your own end of that contract. So I don't want people to see insurance company as thieves. It's just that you are coming into contract with the insurance company. The insurance company have responsibility to handle, why you, the insured, also have responsibility within that contract to fulfill. By the time you fulfill your own end of the contract and the insurance company fulfill the end of the contract, when claim occur or happens, at that point, your claim will be settled. But what most people do is that they just purchase the insurance and they don't understand their own end of the contract. So they don't fulfill their end of the contract. And at the time of claim, the insurance company will tell them, sorry, um, the contract we had that you transferred your risk to us stipulated that you should do A, B, and C. You didn't do A, B, and C. Sorry, we can't um, pay you this claim. So it's not a case of a scam, somebody coming to steal your money. No. So that's why most times, and we find it difficult to read in this part of the world. The white people say if you want to keep any identity from a black man, put it in books. They won't read it. And most times our clients get their policy document, they don't even read. Sometimes we, the salespeople who sell insurance, are the ones that have to explain and make sure and pull some that we are paid. That we have to pull them to fulfill their terms of contract. So, for example, um, somebody wants to buy a life insurance policy, and while you are filling your proposal form, you say, okay, I believe I should be able to pay my premium monthly on a monthly basis. And then the insurance company says, if you fulfill that part, if you pay your monthly premium, in case of eventuality, you are trying to raise 5 million naira for your children or for your family, we will pay you 5 million naira, even though your account balance is 500,000 naira, we will pay you 5 million naira. And then this young man or young woman or executive purchased that premium. For the first 3 months, she paid. Then for the remaining 2 years, she didn't pay. And the policy is supposed to mature at some particular time, and she comes back, please, I want my money. Or eventually he died, and the family got to see the certificate at home, and they come for claim. And the insurance company, sorry, yes, your husband purchased a policy with us, we are to pay 5 million naira if he pays his premium monthly, but your husband have not paid his premium for the past 3 years. Sorry, we can't pay the sum assured. At that point, the bereaved family will say, insurance are thieves. Our daddy was doing insurance and then they did not pay him. Sorry, the dad did not fulfill his end of the contract, which stated that he will be paying premium on a monthly basis. So that's where I want people to understand that insurance is a contract between the insurance company and the insured public. In that contract, the insured public needs to do some things while the insurance company has to do so and so, pay claim ultimately. But if you don't pay that part of that, play that part of your role, the insurance company most likely will not pay because you have breached the contract. And then also, sometimes when you do insurance, you think all the losses have to be taken care of by the insurance company. At the beginning, when I started, I said insurance is a pool of risk. Everybody comes together, we pool our risk together. So we are paying lesser than the sum assured that is guaranteed. For instance, I pay 10,000 naira to cover 1 million naira. So many of us pay 10,000 naira. If anything happens to us, um, we will get 1 million naira claim. That doesn't mean that you don't have a responsibility to pay. The insurance company now has a responsibility to manage that pool of funds so that everybody can have a fair share. So part of the mechanism for managing that pool of fund or pool of risk is their terms. For instance, we have what we call excess, policy excess. We have policy limit. Policy excess means the insured will take the first part of the loss. You are
Oh,
showing responsibility. You are taking part of the loss. That's policy
Mr.
excess.
Seun, Mr. Seun,
Yeah.
yeah, I guess you are so excited because you really want to make some points known, but then your response is more like you are already shooting into the next questions we have for the conversation tonight. Don't worry, just keep calm. The conversation is
Okay.
here. We're not running away, so everything will be tackled,
Okay.
and you will stop calling Mr. Seun a thief by posing. Maybe for the sake of the fact that he was as an insurance broker or so. So please, thank you for clearing that part. I actually love that part where you mentioned that we are not thieves. You really personalize it. You said that passionately, and I think we'll get there. We'll get there. I think the knowledge we're sharing on the show tonight will also help a lot of young professionals out there to see the importance of but then before you we go on to the next question, there are reasons why people we call uh insurance company thieves or so frauds. So what are the ones that you experience? I know that's not part of, or let me just leave that question for later. Maybe when we finish the conversation, in case some of our audience may want to ask questions in relation to what I just said. So let us move on with the questions we have for you at the moment. So question three is what we'll be going for right now. Question three. Uh, sorry, I think I have some issues here that I should. Okay, question three. Uh, so question three. Okay, I think you were discussing something. You were already making reference to policies, SSs. Or yes. Now let's talk about policy SS. What is the policy? What is policy SS, and what other insurance terminologies should one be aware of for personal and business benefit? Especially, you made mention earlier that most of our customers, most people in Nigeria don't read documents. So I think it's high time you educate us on those things, even when we want to read. Is it not when you know what you are looking for that you will know where to go to? You understand me, Mr. Shehu? So
I
please
get you.
explain that. That's what you are about to explain before I cut you short. Thank you.
Okay. Policy SS. When claim materializes. So I was trying to clear some misconception about insurance. I was saying when you do insurance, some people think all the losses are to be taken care of. After all, I paid for my insurance. Come and take care of the premium. The insurance company manages the pool of risk. And like I said, you paid a lesser premium compared to the volume of risk you are covering. So one of the mechanisms by which the insurance company manages the pool of funds so that one person won't carry all the money that belongs to everybody in that pool. So that when the other people come for claim, they don't have anything left because one man have paid 10,000 naira and he has collected 100 million naira. Is policy excess. What policy excess means is that when claim happens, you take some responsibility to identify with the loss that you cause. So for instance, let's say your claim you pay 10,000 naira and your claim is 100 naira. Policy excess says you there's a limit to what you can come and claim. If the claim is, let's say, 3 naira, to manage the pool of funds so that you won't just be doling out money from the pool of funds, so that everybody can have access to the pool. You will say, okay, take care of that. If your claim is not up to this amount, you should be able to take care of that. That's policy excess. So you take part of the loss, no matter how small it is, just to identify, because normally your sum assured is huge and your premium is small. And for the insurance company to be able to take care of every claim, everybody will come for claim. In that pool of funds, we have several thousands of people contributing little money to that pool. So when claim materializes, excess of that policy is the little part of that claim that you are bearing as an insured, so that the insurance company can manage the resources for everybody to benefit. If you come, you have 100 million naira claim and you paid 100,000 naira and you are collecting 100 million naira without identifying with that loss, taking a little part of it, others people will not be able to also partake from that pool of funds that is meant for everybody. So it's one of the mechanisms whereby the insurance company is using to manage the pool of funds for everybody. Then we also have policy limits that says for every loss, so we will pay you beyond 5 million. Let's say your total sum assured is 100 million. You say for every loss, we will pay 25 million because that cover you, the policy covers you for a year. So it's possible that you come about 6 times or 5 times or 4 times within a year to come and do a claim. So policy limit says when you have a claim, you won't pay beyond this amount, so that when you come next time, you still have part of your sum assured to assess. So those are the mechanisms by which the insurance company manages that pool of funds for everybody to use. So excess policy excess is um, you partaking little part of the claim that is supposed to be settled. You have 100,000 naira claim, you are taking 3,000 naira. So instead of paying you 100,000 naira, we will pay you 97,000 naira, so that we still have some money remaining for other people that also have money in that pool of funds. And most times you see that your premium, like, let me hammer this again, your premium is always small compared to your sum assured. Is always small compared to your sum assured.
All right,
So I've talked
thank you
about
very much.
policy
Thank
excess.
you.
Okay.
Thank you. It's actually interesting myself. I want to listen to you, but of course, we must save time. We must save time. And thank you very much. I just want to ask a question from that. Is it possible that if I have saved, let's say I've insured something worth of 5 million naira, and I've saved only 2 million naira, or let me say 100,000 naira with you? Does it mean that I can take over what I have actually saved with you? Is that what policy assess guides against?
No. Policy, you are trying to merge two things now. We have life insurance, we have um, general insurance, property insurance, business insurance. Life insurance is about savings. When you are talking about general insurance, it's not savings, it's one of payments. So for savings now, for instance, when you determine the number of years you want to do, and you determine the kind of cover you want, and you said, I want to do this savings for 3 years or 5 years, you don't come for that money until 5 years. Some policies allow you to come and assess. We call it partial withdrawal or partial maturity. That's a policy on its own. A policy has that access. We have different type of life insurance policies, different type of savings. So if that policy allows you to come and take partial maturity, it will be stated the amount you can access from beginning, that you can access 20% of your savings after 2 years, or 20% of your savings after 1 year, or after 3 years, as the case may be, depending on the policy you want. But by the time you are taking out the whole of the money before maturity, you are terminating the policy, and there will be terminal charge. That's what also many people go through. For instance, you say you want to save for 5 years, and then in 3 years you need money. Your contract is 5 years, and in 3 years you say you want to collect your money. That means you are breaching a contract, because at the beginning of the contract you said, I want to save monthly for 5 years for a specific goal, and then in 2 years, because you know, I have money with these guys now. Why should I have money and then I'm running around? So give me my money, and it's just 2 years. You are actually
Actually,
breaking it. You are breaching a contract, so there will be terminal charge at that point. So, but sometimes you can access that policy without charges if there are allowances for partial maturity and partial withdrawals. So you access that money, maybe 50% of your savings, without charges, because from the beginning of the contract, there is allowance for partial withdrawal and partial maturity. I don't know if that answers your questions.
yeah, that answers my question. And then we'll be expecting question from the audience, please. If you are watching us live right now, remember this is Corporate Live Show with McAden. This show takes place every Friday evening, exactly on the hour of 7 o'clock. To join us next week or tonight, we're discussing understanding insurance for personal and business growth. And we are still on that conversation. And with me in the studio is Mr. Seun Oluboba. And he has been discussing and he has been educating me. I don't know about you. If you have been educated the same way I've been educated here in the studio, drop it in the comment section. Let's get to know what you have learned on the show tonight. And then the show continues. Let's quickly move on because time is not waiting for anyone and we need to catch up with time. Question number 4, quickly. Can you explain some of the most common insurance policy to individuals, and specifically distinguish them from that of the business? Why and why one must have an insurance in place?
Okay. So for individuals, why you must have an insurance policy is because we have compulsory future financial obligations. As a young career person, you are planning to go for your masters, or you are planning to go for your professional professional qualifications, and your salary has been budgeted every month, and you can pull out that money in bulk to for for investing into your career or whatever you want to do. Maybe you said, okay, I want to spend 10 years in corporate environment and then start a business in the next 10 years. So that your plans won't be a wishful thinking, you need to have some target savings. And because it is in the future, your family is there while you are planning, you also need life cover. So basically, there are different type of three major type of policy. One, you have pure protection. As I've said this, some people might say, sorry, I'm very occupied. All my money are budgeted. I can't even spare any money. But you can actually buy a policy that you don't need to pay every month. We call it pure protection. So for someone who you have dependents, maybe your parents or your siblings depend on you to survive, or your wife and children depend on you to survive, even if you don't have money to save, because maybe you are building a house, I know your salary, once you collect your salary, is going to that site, you need to have a minimum, a protection policy with as low as 3,500 once in a year. You can have a protection plan. So 3,500 can afford you 200,000 naira. We cover. So if within that year unexpected happens, the family can get 200,000 naira. But if you say 200,000 naira is small, then you can now increase your premium to get higher cover. Some
All right. So sorry about that. Mr. Sheon is no longer in the studio with us. I think the network is dealing with him as it is dealing with me, and I'm sure that shortly, he will be back with us. It has been a conversation on the show with Mr. Sheon Oluboba. You can follow Mr. Sheon Oluboba on LinkedIn, on Facebook, and on Twitter. I'm sure he's there sharing insights on insurance. It has been an educative one. I can bet with you that it has been a privilege also for me to be learning under his watch. I mean, under his speaking, under this moment right now. I mean, it's a privilege because I've learned a lot. I've learned what is what essays mean in insurance, and I've learned what it means to actually have an insurance. Right now, before he left, he was telling us why I must. I'm not talking about you. Why I must have an insurance policy in place to take care of some contingencies, some of the things that may happen in the future that I may not be able to handle on my own. Yes, that I may not be able to handle on my own, that you may not be able to handle on your own. And that is why we're having this conversation tonight. It's been a wonderful one. And yes, we will take a short break. And when we take this short break, we will definitely return back with more questions for Mr. Shield. And I do hope he's able to join us back shortly when we come back on the show so that we can continue with the conversation. Remember, this is Corporate Live Show with McAden. It's been a wonderful Friday evening, though a rainy Friday evening. And we'll come back, as I earlier mentioned, we'll come back to continue with the conversation.
Do you know that you can save yourself from some unnecessary worries of life in career and in business with the adequate knowledge about insurance? My name is Oluboba Seun. I am an insurance sales and portfolio manager, also an associate of the Chartered Insurance Institute of Nigeria with over 11 years in industry. I will be at the Corporate Life Show with McAden on Friday, May 31st, where we'll be talking about understanding insurance for personal and business growth. The time is 7 p.m. We'll be streaming live on LinkedIn, on Facebook, and on YouTube. I'm inviting you to be part of the conversation. Mark your calendar and invite others too. If you want a place where you can be kept abreast with happenings in the corporate world and also get free access to interview tips, timely job offers, and whatnot, then I'm inviting you to like and follow the Corporate Life Show with McAden on LinkedIn, on YouTube, on Facebook, and other social media pages. See you at the Corporate Life Show with McAden. Do you know that you can save yourself from some unnecessary worries of life in career and in business with the adequate knowledge about insurance? My name is Oluboba Seun. I am an insurance sales and portfolio manager, also an associate of the Chartered Insurance Institute of Nigeria with over 11 years in industry. I will be at the Corporate Life Show with McAden on Friday, May 31st, where we'll be talking about understanding insurance for personal and business growth. The time is 7 p.m. We'll be streaming live on LinkedIn, on Facebook, and on YouTube. I'm inviting you to be part of the conversation. Mark your calendar and invite others too.
All right, we're back. And sorry for going off. And we are back, and the conversation continues. And because of our time, I want Mr. Sheon to just move quickly respond to the question fourth that we were discussing, and then we can continue. Thank you.
Okay, so
Just
sorry for the break of transmission. So for individuals, we have for life insurance, we have pure protection. What a little token once in a year to have cover to protect your family or anybody who depends on you for livelihood, for their livelihood. Maybe your children and your wife, your parents, your siblings. As long as you have people who depend on you, who rely on your income, you need to have worst case scenario a pure protection cover. You only pay, you can pay as low as 2.5 to have a 500,000 naira cover. Sometimes you pay 3,500 to have 200,000 cover for you and your spouse. So you should have pure protection cover, and then you can have investment and protection policy as an individual. So you want to save for 5 years. We understand there's going to be inflation. So saving for 5 years, we have factored in the effect of inflation. So we are giving interest. Why we are giving interest on that policy? In case of eventuality, even though when you have 200,000 naira and your sum assured is 5 million naira, we pay the 5 million naira, not the 200,000 naira account balance. So you can have a pure protection policy, you can have a protection and investment policy tied together, and you can have a pure investment savings plan. Then, as a business owner, you have to have asset protection policies, and that's fire and burglary. Then liability policies. Liability policies that cover employers' liability. You know, by law, if you have staff that are working for you, by the time, God forbid, if any of them pass while working for you, by law, you are supposed to pay 3 times their annual salary. As long as you have not less than 3 staff, you are supposed to have group life for them. You are supposed to have employers' liability for them. So, as a business person, you have not less than 3 staff. You have to have liabilities. Why people are working for you, why people come into your premises. We have what we call also occupiers' liability for business place, social gatherings where you transact your business. When people come into your organization, and for our venture while in your office, the person slump or the person got injured, you are supposed to have occupiers liability to compensate that person that comes into your premises to come and do business and then got injured. We don't plan for those things, but they happen. So by law, you are supposed to have occupiers liability that protects a third party that comes into your organization or into your premises to transact business with you. You also are supposed to have employers liability. I've said that. Then professional indemnity. As professionals, lawyers, doctors, engineers, as long as you have professional certification and you are doing business, what professional indemnity does is that it recognizes the fact that as professionals, we are human beings, we can make mistakes. So while doing your business, you mistakenly cause a loss to your client and the client is suing you. Professional indemnity covers you, and then all the legal fees and the legal charges will be on the insurance company to settle, because you as a professional have done what we call professional indemnity to cover any human error while carrying out your professional activities. So as a business person, professional doing business, you need to have professional indemnity. You need to have employers liability. As um, by law, you are supposed to have group life and you are supposed to take care of your staffs. So employers liability and group life take care of that, and then your assets, your income generating assets are supposed to be protected. Imagine when your income generating asset for your organization got stolen or got burnt by fire. That means your business should be on hold. So as a business person, you're supposed to have asset protection to protect your income generating asset. Your car that you use for marketing, your building, your office, God forbid if fire happen in your office or your shop in code, you can't transact business. So there's also what we call business interruption insurance. What business interruption insurance does is that it will calculate the money you will generate when a loss occur. For instance, fire incident happened, and then you can't do business. But naturally, you're supposed to be generating businesses. Maybe the shop will be closed for 1 month. The income you will have generated for 1 month will be paid to you by insurance company if you have business interruption. So, as a
Mm,
business person, for you to remain steady and to forestall any loss that will come because of unplanned risk, you should have business interruption insurance, you should have asset protection insurance, you should have
mm,
employers
mm,
liability that while your staff are working for you, should in case they, because you are liable for your staffs. If they die,
mhm,
if they have injury, insurance will take care of them. You are supposed to have HMO as a business person to take care of your staff. Why you have to have these things is because if you don't have those insurance, you will dip your hand into your purse, your profit to be doing that. Whereas you can pay a little token to have huge cover to take care of all these losses. I think that answers those questions.
Yeah, a lot, a lot. It answered a lot of our questions, and I didn't want to stop you because I gave you 1 minute, but you spend more than one
Okay.
minute because you are hitting on some points that need to be addressed, especially for the sake of our audience, for the sake of our audience, and for myself because I'm learning on this platform tonight. Because tonight's discussion is really a time to actually bring out a jotter and pen and take notes. Thank you very much, Mr. Oluboba Seun, Oluboba, for being here on the show tonight. It's been a conversation here at the Corporate Life Studio, and we want to be able to catch up with time. Like I said earlier on, let's move straight to question number 5. And question number 5 says, what are the penalties for missing due to be paid to an insurance, and can one can one recover any money from any abandoned insurance policy?
Okay. Thank you for that question. I love the way you crafted that question. They said, what are the penalties? So definitely there will be a penalty for a breach of contract. Like I said at the beginning, insurance is a contract. And in a contract, there are things you are supposed to do. If you don't do them, there will be penalties. So normally there's a slang we use in the industry, no premium, no cover. What that means is if you don't pay your premium as at when due, you can't automatically have cover. What guarantees your cover is the premium you pay. So if you don't pay, for instance, or like the example you cited the other time, if you want to collect, you want to stop paying premium and you want to collect your money, that means you are terminating the policy. For savings policy now, for life insurance, that means you are terminating your policy. You said, okay, I don't want to pay again. I want to collect my money. I signed a 5 years contract. I'll be saving monthly for 5 years. And then after 2 years, you said, I want to collect my money. I don't want to do it again. There will be what we call termination charges. And in some cases, you won't even get anything because, like I said, if it is a long-term savings that requires life cover, what happens in insurance? We don't bear the risk alone. We share risk so that there's some claims when they happen, they are so huge that insurance company can't bear them alone. We spread, that's why we spread our risk. So for every premium you pay to an insurance company, all of the premium most times don't stay with the insurance company. They also spread the premium to larger insurance companies that we call reinsurance company. Reinsurance company are big insurance company, continental insurance company. They have capacity to manage um, insurance companies. So when we collect those premiums, we also share those premiums with them so that when losses occur, they will be able to support us to pay the claims. So if you are terminating a policy immaturely, for instance, if you have a 9 years policy, let me cite an example of an Iroko tree. Iroko tree builds its roots downwards first to be able to withstand the length, the height of the tree. So sometimes life policy that are long term that require savings. Some of the savings, the premium you pay for the first 1 year, 2 years in some cases, are meant to secure the life cover. For instance, you want 10 million naira in 9 years. Most likely, the 2 years premium you paid will be used to secure that 10 million naira. So if you die God forbid, if the insured person dies 2 years, 1 month, or one year into that policy, you'll be able to pay that million naira, 10 million naira. Whereas you have just contributed 1 million naira or 500,000 naira, you will pay the 10 million naira. So the no the charges that will be coming on if you decide to now terminate that 10 years policy in second year is due to that life cover that we have secured with reinsurance to be able to guarantee that 10 years premium in case life happens. So you have 10,000 naira, you have 100,000 naira in your account, and we are paying 10 million naira. So we are charging you when you come to terminate that contract abruptly because of that life cover. So there will be penalties. Also, sometimes depending on how long you have stayed, the penalties will now start reducing. So you have a 9 years policy, and then you want to terminate. You are pressed for finance. You want to terminate after 5 years. You will get money. Somebody that is terminating in 5 years will get more money than somebody that is terminating in 3 years. Somebody that is terminating in 6 months will not get anything, because even the premium he has paid is not enough to cover for the life cover that will guarantee the sum assured of 10 million naira. So the duration you stayed on the policy determines whether you are going to get anything and the extent of the penalty you are going to suffer. And so I
Mm,
don't know if that
that is
answered that question.
interesting. That is beautiful, beautifully answered, beautifully answered. Thank you very much. And it's actually interesting what we've been discussing so far here on the show with Mr. Oluwaseun. But then I expect more questions from the audience, but it's fine. For me, I am learning. Even if I'm having a personal conversation with Mr. Seun here, it's not a waste of time. And I believe that some people will join us and share more insights on this particular episode of the Corporate Life Show with McAden. Remember, we've been discussing and understanding insurance for personal and business growth. We move on to the next question because of our time. Moving on straight to the next question. We'll be taking question 6, and this helps us to understand something more about insurance. What are some common red I mean, some common real life examples of how insurance has helped individuals and businesses recover from losses. Maybe you want to share with us cite some examples for us, and what are the
Okay,
lessons we should be doing?
over the past 10 years I've been in the industry, I've had to pay claims, several claims. So I bring in businesses, I underwrite them, and I pay claims. So there's a particular family, a client, she has 3 policies with me, and got so good. Um, December 2021, she paid her premium up to date. She was actually owing. She had some outstanding premium. So December 2020, she cleared her premium, her outstanding premium, and then in January, mid of January 15 thereabout, she died suddenly. She had a successful operation, but they didn't detect that blood wasn't flowing somewhere, so she died. And she had 3 policies. She owns a business, so she did group life for herself and her staffs. She has 2 personal businesses with me. One was 5 million naira sum assured. The other one was about a million sum assured. Even our 5 million naira sum assured, she has collected about um, over 1 million naira. We paid the claims. We paid over 14 million naira on our on the group life. Being the CEO of the company, she assured herself with 8 million naira. We paid her 8 million naira from group life that she has for herself and her staff. For the first policy she has with us, which was 5 million naira. Out of that 5 million naira, she has collected about 1.5 million. We still paid the whole 5 million naira. That's 13 million naira. Then the second policy, she has 1 million sum assured. We paid additional 1 million naira. That's 14 million, 14 point something million naira to the family. They were so grateful. She wasn't planning to die, but she just had surgery, and then she was no more. you paid with less than a million naira in account. You paid over 14 million naira to the family that
Mm.
was bereaved. They were able to start life and move on afresh. And so also about to do several claims for car insurance. You know what it means when you have budgeted your salary and one downfall driver bash your car from behind, and you don't have any spare money, but thank God you have comprehensive insurance. All you need to do is to take a snapshot of the scene of the accident and lodge your claim. By the time you lodge your claim, you have paid your premium. Your insurer will repair your car, will pay you to repair your car. And then your car is back on the road. You don't have to go borrowing to fix your car because that car is needed for the family and for your business and for your work. Also, for buildings that have been gutted by fire, buildings have been rebuilt all over again. And for staffs that were sick, they had to go to their HMOs, got treated freely because they have paid, their companies have paid for their HMO, for their health insurance cover. So there are countless benefits of
Yeah,
insurance to do with the
countless
countless,
and countless,
countless.
countless
Yes.
and countless. Yeah, I can bear with you that there are countless and countless insurance policy out there for people to choose, and that's why we're having this conversation so that you have knowledge before taking decision. I'm talking about having knowledge before taking decision. We're moving on straight to question 7. What factors should be considered when choosing a personal and business insurance policy?
Okay. So when you want to choose an insurance policy, one, you need to consider the insurance company you are buying from. You want to know the capital base of that insurance company. There are international organizations that rate all insurance companies. So independent rating agencies rate insurance companies. So you want to know, is this insurance company doing fine? Also, one of the reasons why people call insurance company thieves is because of some. I agree. Some insurance companies were badly managed and they have gone into extinction. I want to believe if you Niger Insurance is no more today because it was badly managed. Their capital base got dropped. They had more liability than the capital base that they have. They were not solvent again. They couldn't settle claims. People were waiting for months before they get their claims settled. The regulator had to step in and then dissolve the organization and look for a buyer to come in and buy over the organization. We also have IGI. IGI was badly run. So before you choose an insurance company, you want to do a fact check about the organization. How are they doing? Are they brands that we know? What are customers review about the insurance company? Then also you want to know personally. You want to also assess. You want to know what exactly you want to cover. If an insurance company do not have a policy that takes care of your insurance need, then you shouldn't patronize them. So that's where professional advice is needed. You consult professional. You tell them, you discuss what you are trying to do. Professional will help you identify your insurance need, articulate your insurance need, and advise you on the best policy that will take care of it. So you seek a professional advice when you want to go and buy an insurance policy. Also, you consider the legal and regulatory requirement. You know, sometimes when you want to go into a contract, they will not give you that contract until you have provided insurance. And the person giving you the contract will have stated, we want so limit of cover, we want this type of cover, we want this. So you want to consider the contract terms. You want to cover your own, you want to assess your own risk to know exactly what extent of cover you want. For instance, if your business is worth, let's say, 100 million naira, you can't be doing a cover of 10 million naira because it won't serve you. So that's where you need to do risk assessment first to know the extent of cover that will be suitable for your business. So this sum assured that I'm getting, or this policy limit that I'm stating, will it be enough for me to get back to my feet? So you want to know the policy limit, the sum assured. You want to know the excess that is um, on the terms and condition of the policy. Policy excess, like I said, when a claim happens, the insurance company will say you have so percentage as policy excess. So you want to be clear how much is the policy excess on the insurance contract that I'm signing, so that I will know how much I will be getting at the point of claim. Because some people get shocked at the point of claim. They are telling them that sorry, Oga, your policy excess is 10% of the value of your claim. So the man is his claim is 1 million naira, and 10% is 100,000 naira. So he's expecting a 1 million naira claim, and then they are telling me, Oga, we will be paying you 900,000 naira. He will be shocked and sad because he didn't understand the policy excess from the beginning. So you want to know the policy excess from the beginning of the contract, so that by the time claim materializes, you are not surprised. And then you want to know exclusion. There's something we call, for instance, your car automatically flood is not covered. We have what we call policy exclusion. So you want to be aware of the policy exclusions. Riot is not covered because we know when riot happens, your car can be damaged. So it's not covered in your comprehensive, but you can buy it into your comprehensive insurance. That means you are going to pay more than the other people that are not buying that. Exclusion can be bought into, for instance, flood, civil commotion, and riot. You want your car to be covered for flood, so that if flood damage your car, it will be covered. If riot happens and they damage your car, you can buy it. So you want to know what the exclusions are, what the policy limits are. You want to know what your premiums are, and then most especially, you must seek professional advice to know the appropriate cover that will be suitable for your business and for the risk you are trying to cover.
All right, thank you very much. Thank you. It's been a conversation. We want to wrap the conversation up, and that is why we'll be going straight to the next question for Mr. Seun Oluboba. We've spent so much time discussing tonight, but then we just want to ask the last questions. I know we still have more questions, and because of our time, we don't want to keep our audience for too long. It's already 10 minutes past the hour of 8 o'clock. I want to let go of everyone so that we can have a beautiful weekend. So we'll go straight to question 8. What are the legal requirements for individuals and businesses? What are the legal requirements for individual and business insurance, and how can business and individual ensure compliance?
Okay. For life insurance, individual life insurance.
Very fast.
For individual life insurance, there are really no big laws and terms except for the contract terms that you are supposed to fulfill. So it's personal. You know the kind of cover you want, and you sign that contract with your insurer. You are supposed to keep to the terms and conditions of that policy with your insurer. So for individual life insurance, but there are some compulsory insurance. When it's now starting to get to a point where third party are affected, then government have some compulsory insurance that you must do. For instance, as an individual, for your car to be on the road, it must be insured. If your car is not insured, then you are driving that car on the road, you'll be fined by the government. Why are they doing so? Because of the liability, the risk of third party. If you are driving your car, accident can happen. You can damage third party properties. You can also mistakenly cause loss of life to third party. So for every risk that involves third party, that you must that you have to partake in, you must have an insurance for it. So that is why government gave us some compulsory insurance. For instance, for individual, for motor insurance, you must have insurance. And for you to be compliant, don't drive your car if there's no insurance on it. Otherwise, you'll be fined by the government because you do not adhere to the law. The law is don't drive if your car does not have insurance. Third party liability on insurance is up to 3 million naira. Comprehensive, the minimum comply with that law is have a third party to drive your car on the road. Then for employers, you can't have up to 3 staff and don't have group life. You can be sued by the family of the staff and even by government, because by law, if you have 3 staff and above, you should have group life. And then as professional, when you are carrying out your professional activity, you are a certified professional, you should have a professional indemnity. What that is stating is that you are rendering services to the public and you are human, you can commit a blunder and by committing a blunder, causing a loss to your customer who is a third party. Your professional indemnity is what is going to compensate the third party that you are rendering service to. So for you to comply is for you to have professional indemnity. If you're a professional that is rendering out service, you should have a professional indemnity. Most especially medical professionals. For you to practice or for your hospital to be satisfied, you must have professional indemnity. Then employer liability, you must have it. So those compulsory insurance, motor insurance, group life insurance, professional indemnity, occupier liability, for you to have business places that third party comes into. If any loss or damage happen to a third party that comes into your premises, by law, you should have occupier's liability to compensate the third party. So for every risk of your business, of your day-to-day activity that involve third party risk, third party liability, you are supposed to have an insurance cover to avoid any liability or to compensate third party that will get injured because of your own activity, your business activity, or your daily endeavors. So for you to comply is to have those compulsory insurance, motor insurance, group insurance, group life insurance, professional indemnity, occupiers liability, and for importers, marine insurance. For those who build buildings, builders liability insurance. I think that answers the question. Are you there? I can't hear you. I can't hear you.
Yes, I believe you can hear me now.
Yes, I can hear you now. Yes.
Okay, that's fine. I just feel like, why not just let us wrap up the conversation? Let's tweet all the questions. What you are sharing is very educative and is very timing. Because we're in a season and era where you may not have all it takes to live conveniently for yourself, but you don't want to run into problem of having to take care of what you have caused damage over. So that is why I felt like, let's just wrap up the conversation. Let's tweet every other questions on the show right now, and then if there are questions from the audience, they can share in the comment section so that it can be tweeted along the line. So thank you very much. So let me just quickly go straight to question number 9. We have two more for question number 9. So question 9, if you can see the question on the screen, it says, can you share some examples of successful business leaders who have successful business leaders? Sorry, I'm finding it difficult to read from here. Okay, some successful business leaders who have utilized excuse me. Some successful business leaders have utilized I think there's a mix up here.
9. Question 9. I guess we are moving to question 9 now.
All right, sorry guys, I'm back, and I was trying to read question 9, but I think there is a mix up with question 9, so I'm going to just read the last question, which is question 10. Question 10 says, "What should having a policy should having a policy uh, should having a policy become a business?" Uh, so I find a way to see these questions. Sorry, pardon me. Just give me a moment, please. Okay, question 9 that we wanted to ask earlier. We will not be asking that anymore because of our time. Let's just move straight to question 10. Should having a policy be considered as a
If we can
business, and
take that
at
9,
what
if we
stage?
can still take that 9, if you can still take that 9,
Hello, can
it's
you hear me, please?
yeah, yeah, I can hear you. Can you hear me?
Yes, I can hear you.
So that question 9 is very, very important for business. Uh,
Okay. Then let's move. Let's just quickly answer the question 9. The question 9
yeah.
says, "How can small businesses balance the cost of insurance?"
Okay. For small businesses, for you to generally, for you to maximize your insurance based on your budget constraints. Number one, you should, as much as possible, try to maintain a good claim experience. You know, there are moral hazard. People just come, I have insurance, then they take claim anyhow. Like I said at the beginning, claim is a pool of funds. One of the mechanisms why insurance manage their pool is when your claim is higher than others in that pool of funds, you increase your premium to be able to balance the expense of other people. So if you are taking, everybody contributed 10,000 naira and you have collected 500,000 naira, you won't at renewal, you won't pay the same 10,000 naira you pay to be um, fair to other people in that pool of funds. They will ask you to pay maybe 15,000 naira. They will increase your premium so as to manage that pool of funds. So for you to have manage your budget of insurance, maintain a good claim, a responsible claim experience. Then two, you maintain you adjust, you regularly assess your risk and prioritize your risk. So for some risk that you think you can manage better, that okay, I think by doing this I can take care of this risk by putting burglary or doing one or two things, putting some things in place that can leave this risk and prioritize this other risk that I have little or no control over. So you can prioritize your risk and drop some risk based on the level of importance. Prioritizing your risk and then regularly assessing your risk. Then you can also limit your cover to what premium you can accommodate. So for all those um, compulsory insurance that you must do, if you see your budget as a small business that you don't have big premium to pay, you can say, okay, I have budgeted 50,000 naira for insurance. You are going to ask for a cover that will be suitable for that 50,000 naira that you can afford. It's possible. So you ask for a customized um, insurance cover, insurance limit that will accommodate the premium you can afford. Also, you can also do a customized policy. We call them bonded policy. So you are not doing them individually. Instead of doing fire, doing liability, doing motor insurance, you can ask them, I'm a business person. These are all my risks. I'm putting them together as a bundle policy. I need it to charge me. If you have to do all of this for me as a bundle, as for my business, how much are you going to charge me? It's going to be lesser than when you want to do fire alone, do burglary alone, do liability alone. So you can do bundled um, policy. You can also limit your cover to the budget you can afford, and then you also try as much as possible to have good risk management that will enable you to have a decent claim history. Once your claim history is decent enough, your premium will also be managed. It won't be increased arbitrarily because of the kind of claims you are taking. I think that answers that question.
All right. Thank you very much. Thank you very much. I believe we've gotten clarification uh for that question 9, and we'll be moving straight to the next question, which is question 10. Because of our time, that's the last question for the us on the show tonight, and it's been an exciting one here at the Corporate Live Show with Mr. Oluwaseun Oluboba. Question number 10 is: should having a policy be considered as a business, and at what stage of life should an individual really start to consider insurance for personal, family, and business? Thank you.
Okay, so insurance is not a business. It's never a business. Insurance is not made for you to make profit. Insurance is supposed to restore you to where you were before a loss occur. So um, that you had 2014 Toyota Camry and you had accident, you will not be requesting for 2024 Toyota Camry at the time of claim. So at that point, you are seeing it like you want to make profit. No, insurance will replace your 2014 Camry with the 2014 Camry. So it's not business. You are not supposed to make profit because of the fact that you are actually paying a small premium to get a huge cover. If only you get all the contributed premium, others will not have any claim to claim. So it is not business. It is not to make profit. It is to restore you back to where you were before a loss occur. It's to restore you back to where you were before a loss occur. And then when we pay return on investment for a long-term savings, the return on investment primarily is to cushion the effect of inflation. Is to cushion the effect of inflation. It's not to give you one. Some people will tell us, insurance, why are you giving me 5% return on interest? We won't give you 20% because you still need to turn out turn over that money to be able to generate all the cost of doing that business, and then still pay you your sum assured and then pay you additional interest. So there's no how we can pay you arbitrarily huge return on investment. It's purely risk management. So insurance is not business. And then the earlier you start insurance, the better it is. One, generally, people that are younger pay lesser premium. They pay lesser premium because it's assumed based on life expectancy. If you are younger, you are likely going to stay longer. So you will pay lesser premium compared to somebody who say, I don't have time for insurance now. Let me do insurance when I'm 50 or when I'm 30. When you get to 30 or 50 or 60, you will be paying higher premium compared to somebody who starts paying premium early. So the younger you are, the better your premium for life insurance cover. And then also If you have a life goal, why not start early? The earlier you start saving. And then some people do mistake. They say, if I give you 1 million naira from insurance, how much will you give me back? Insurance savings is actually not meant to be drop huge funds and walk away. You're supposed to save over time. It's supposed to help you build savings culture over time. So it is not how much you save, it is how consistent you are. So if you can save consistently early enough, the better it is. So generally 18 years, as long as you're 18 years, you can start saving. So the earlier you start saving, you have that saving culture, the more likely you are going to save compared to somebody that is waiting till when he gets to 50 before he starts saving. So the earlier, as long as you are 18, you can start saving earlier. When you are younger, you pay lesser premium compared to somebody who is older. So
All right. It has been a wonderful conversation on the show tonight, despite the rain falling, despite the network fluctuation, despite technological disadvantage against us tonight. We finally have this conversation, and it has been an interesting one. And really, I don't want to go out of the stage tonight because it has been a knowledge packed conversation with Mr. Oluboba. And of course, now I can say for sure that insurance brokers or companies are not thieves. That is the end of our conversation for tonight. And I can see the smile of Mr. Shield. Yes, you guys are not thieves. You guys have been very helpful and with the information we've gathered tonight. I do want to hope that professionals out there who will be listening to this show, the record version of this show, will learn better. And you can always reach out to Mr. Shield on LinkedIn. Uh, his name is his handle is Oluwaseun Oluboba. So reach out to him for more information. He's an insurance portfolio manager, so he will guide you and help you with any insurance problem you may have. And it has been a wonderful one on the show. I can say on and on. Thank you, and for everyone that joined us on the show tonight. Thank you also. So from here, we want to call it tonight. Any last word, Mr. Theo, before we go?
okay, I like to tell everybody that your investment portfolio is not complete without insurance. So you're working so
I didn't
hard
get that.
to
Yeah,
gather assets. You're working so your investment portfolio is not complete without insurance. So you are working so hard to acquire assets. You are working so hard to build a decent life, to build that business. That investment you have put into that business is not complete without insurance. Because one event can wipe out all those investments. So as much as possible, if you desire to transfer your wealth and your investment into your business and in your life to the next generation, then you need to start thinking about insurance. So you are buying a car, you are building a house, you are starting a company, you are generating over a 1 million naira. One accident or one third party liability can wipe out every investment. So if your
Mm,
desire is, I want to transfer my wealth to my next generation for my children to enjoy, I want to transfer my assets to next generation, then you have to insure that asset, you have to insure that business. That is the only guarantee you can have that will secure your asset and investment for the next generation. We see multinationals that have been spending over 100 years. One of their secrets is insurance. Most times when you want to do business with them, they will not give you contract without insurance. It's part of, you can't even do business and contract with them without getting insurance because they believe their business must be short. And that's the principle that have been keeping them for years. So you see many of our business owners here in Nigeria, I'm sorry to say, most of them do business, take the money to enjoy life. They don't think about insuring the business and spending what is left. Insurance is one of the compulsory um, expenses that you need to spend on your business if it is to last and if it is to survive to next generation. So your investment portfolio, personal or business, is not complete without insurance. Just think about it and start working on how you can insure your personal business and your personal assets and wealth. Thank you very much for having me.
All right, thank you very much. The last word here is your investment portfolio is not complete without an insurance policy. So it's been a wonderful one tonight. And from here in the studio at Corporate Live Show, I want to say a good night to everyone and bye bye to you all. Bye bye, everyone.
Yeah,
And
thank you for
Toshio,
having
bye
me
bye
too.
to you too.